Moss Adams on how to develop skills to apply in the professional world. It'll be happening at 5 to 6 p.m. via Zoom. And on Saturday, we are having our Accounting Association Hollywood Hills hike at 10 a.m. Please sign up for some more information. And we are still having our table sittings. Our last day is going to be on Friday. I believe we're located right now in front of the Matador statue for the club week. I'm not so sure, but you'll find us there. And I will pass it off now to Garrett for our presentation on market awareness. And thank you all for coming.
Hey, Leander, thank you very much. I appreciate it. For those of you I have not met, my name is Garrett. I'm a campus recruiting manager with the firm, but we'll get to introductions in a second. I hope y'all had a very nice meet the firms last night. I have a feeling we'll be back in person soon enough, but it was nice to be able to do the event. I was not there, but I believe David was there, and we had a few other folks from the firm that were there as well. So if it's all right with everybody, I will share my screen, but I think I need either Leander or Isaac to help me out with that.
There you go. I gave you access.
Quick, look at, love it, full service. All right, here we go. Can everybody see the screen? Just give me a thumbs up if you can see it. Yeah. All right, sweet, thank you. Okay, let me get everything situated over here so I can see everybody on one screen. So I've got presentation on this screen, and then you guys are all over here on this screen. So I'll be bouncing back and forth. But happy to be here. So yeah, market awareness, market branding, kind of knowing a little bit more about the public accounting profession is what we're going to talk about today, and kind of how the need for public accounting popped up, what those roles within the public accounting space are, and then eventually what one does with those skills should you decide to leave public accounting and go on and do something else, right? So first, I wanted to do a few introductions, if that's okay. So Thomas, would you like to introduce yourself?
Yeah, my name is Thomas Cook. I'm a senior tax manager in our Woodland Hills office. I've been working with our team for going a little bit over 2 years, which means that I just started before the COVID pandemic, which isn't a nice association. But I'm a fellow CSUN alumni. I graduated with a master's in taxation, great college. So CSUN holds a special place in my heart.
Thank you, Thomas. David?
Hi, everybody. My name is David Tsuprun. I've been with Bakertilly a little bit more than 2 years. I started right before the pandemic, worked a month in the office, and then we got sent home, and I was working from home till we came back in, I believe, June of that year. And yeah, I went to CSUN as well, like Thomas, and it holds a special place in my heart, and it feels good to speak to people who have been in my shoes a couple years ago.
Absolutely. David, thank you. Thomas, thank you. And for those of you I haven't met, my name's Garrett. I'm a campus recruiting manager with the firm. I used to be an auditor. So because we have two tax folks with us today, you'll have to make do with me being kind of our audit representative for today. So my undergraduate degree is in accounting. I have my CPA license. Fun fact, the CPA license, whether it is active or inactive with the California Board of Accountancy, costs $250 to renew every year, which I thought was kind of funny, even though it's inactive and I don't necessarily use it. But I came up with the firm, predecessor firm Squire Milner, as an audit associate, made it to a senior associate, left the firm for 1 year to be a controller at a digital advertising company, and then came back to the firm in the summer of 2018 as a campus recruiter. And then in November of 2020, we got bought by Bakertilly. So that's a little bit of our stories here today. So we got some tax and audit covered for you and some general recruiting type stuff covered for you. Now, ordinarily, I know in these presentations, a lot of firms like to give you a lot of slides about who the firm is and what we do and all that kind of stuff. I know you guys have seen a million of those, so we're just going to do one quick slide here. This is who we are. I had never heard of the firm when I was the first time I heard the name Bakertilly, I had no idea who the firm was. It was my boss calling me in February of 2020 saying, hey, we're going to get bought by this firm called Bakertilly. My response was something along the lines of, who the heck are they? Looked it up, And what I found is the same thing that I think many of you will find when you look up the firm. It's a big firm. It's been around for a while and they do a lot of stuff. It just wasn't geographically in California. Hence the reason they acquired us is to have a presence in California. We enjoyed the merging with the firm because in California, we got a bigger footprint around the rest of the country and significantly more resources to help both our employees, but more importantly, our clients. So here's some basic facts about the firm. If you are curious about more, highly encourage you all to visit our website. There's a ton of content on that website. And you can dig into deep little holes wherever you like for stuff that interests you. I always find it humorous. Students will frequently share with me things that they found on the Bakertilly website or on the internet in general. And there's a lot of stuff I've never even seen or heard of yet. And it's kind of my job to know most of that. So a lot of good content out there. Okay, so we are currently recruiting for internship positions in 2023. However, if you're interested in 2022 positions, since there's still a lot of the year left, just email me directly, and I put my email addresses right below me here. And so this is for 2023 internships or anything. You can pop on Handshake and look. Our application deadline is this Friday. So make sure you pop on there and apply both through Handshake and our website. All right. Okay, enough of the housekeeping items. Let's see, here is what we're going to talk about. You know what, I'm going to go backwards for just a second, guys. This little QR code here, if you want to scan that, if you have not done so already, this is just a check-in feature for us. So it lets us know that you were here today and lets us gather some really basic information about you guys, kind of audit, tax, internship, full-time position, graduation date, 150 unit mark for the CPA exam, all that kind of fun stuff. All right. All right. Now let's get to the main event for today. Here is what we're going to go over. The history, a quick history of public accounting, and don't yawn or roll your eyes just yet. What I want to cover in this kind of portion is how public accounting came to exist. It basically filled a market need, right? And so I'll cover that. What specifically do CPAs do? Because I mean, the first thought when all of us decided, hey, we want to study accounting in college, most of us, it's like, okay, yeah, taxes, that's accounting, right? And that's a big part of it, but there's a lot more to it than that, right? And then, okay, now that I've got my CPA license or I'm working in tax, what do I do with this? Where do I go from here, right? And then any questions you have, by the way, if you do have any questions, please just take yourself off mute and belt out your question. I will not see the blinking orange thing for the chat box. So please interrupt me whenever you like. I promise I will not be upset about it and you can ask whatever you like, all right? So the first thing I wanted to start with on this is what exactly is public accounting, right? Because a lot of us, that introduction to financial accounting or introduction to managerial accounting that we either took at a community college or at CSUN, we like the class, unless mom or dad or aunt or uncle or someone was an accountant or a CPA, most of us have no idea what the heck we're getting into, right? So you start hearing this thing, public accounting. You go to CSUN and all of a sudden you're getting, hey, you got to go to meet the firms, you got to meet these firms, audit or tax, public accounting or private, blah, 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 blah. And it gets a little overwhelming. So what the heck is this thing that we do? What are CPA firms? What is public accounting? What is all of that, right? I wanted to start with that question. But in order to answer that question, we've got to take a closer look and go a little backwards, right? And so we've got to take a closer look at the history of public accounting. And if you roll it all the way back, if y'all remember from your financial accounting textbooks, usually there's some mention of some Italian guy that created double entry bookkeeping back in the 15th century or thereabouts. Does that ring a bell? You guys don't need to remember the guy's name exactly, but does that kind of roughly like, oh yeah, that at like chapter 1 of your financial accounting textbook usually mentions something about double entry bookkeeping. Does that ring a bell at all? You guys can use the emojis if if you don't want to take yourself off the camera, but if there's give me a little sign that this is ringing a bell at all. Yep. Dixon, thank you. Appreciate it. Yep. Andrew, thank you. Appreciate it. So the thing is, for all of time, people have been writing down and keeping records of things, right? They've been accounting for things, right? Really what ended up happening here is this pivots once you start using a double entry format and your debits and your credits and kind of keeping track of things that way. That's a big fork in the road and a big start of really detailed record keeping for what's happening, keeping track of transactions. And remember, maybe the US dollar obviously was not invented yet. The United States was not invented yet. And so there's a lot of financial transactions that are happening and people have to keep track of these things. It was not until roughly 1602, now this is highly disputed, you start getting these stock exchanges that are created, right? In order, ownership of companies. By the way, I would have lost a bet on this. If I'd have told you that the New York Stock Exchange predates the London Stock Exchange, would you have believed me? Right? I would have bet everything I had that the London Stock Exchange was founded before New York, but not by very much, right? It's just a little bit. New York edges London by just a little bit, but you get these stock exchanges that start popping up at the very beginning of the 17th century. And as all of these great explorers start exploring the world, was it in 1492, Columbus sailed the ocean blue, right? So we start getting a really global economy with all of these East India companies, all of these things, and business starts to explode, right? The 19th century comes around, and you've got what happens then? You've got a lot of industrialization, right? So all of these different companies are starting to pop up with truly global markets and trading all over the world, right? So at the very end of the 19th century, you start seeing the American Association of Public Accountants is created in 1887. New York becomes the first state to create the title of Certified Public Accountant in 1896. Our beloved California Board of Accountancy was invented in 1901 or founded in 1901 in San Francisco. And look at what they do today, right? A lot of CPAs in the state, although not as many as you'd think, right? 81,000 still seems like small to me, but it's a select group, guys. And really, the reason these things were invented was because of the growth of the corporate ownership structure in the late 19th century and early 20th century. Right? So the history of business, as business starts to expand, ownership starts to get a little bit different. The record keeping for all of this starts to get more sophisticated, right? And that's where you start to see, okay, we need certified public accountants to keep track of this stuff. Does that make sense? Here's where we start to really accelerate. And it's interesting to me that relatively speaking, our profession is 125 years old-ish, 130 years old, if you really want to stretch it that far back. Right? It's in the grand scheme of things, it's really not that old. So the big four accounting firms, most of them get their start somewhere near London, right? And then expand to the United States at some point. But through a series of just hundreds, if not thousands of mergers and acquisitions since the late 1800s or early 1900s, these firms are as big as they are today because of that, right? Now let's look at a couple of marquee things that happen. So in 1913, the United States passes the Revenue Act. Income tax becomes a thing. Therefore, you need a bunch of accountants to help you both administer the income tax and also prepare your income taxes, right? So this is a huge wave that you see there. In the 1920s, this is known as the Roaring Twenties, although we're also in the 20s now. So we've got a new form of the Roaring Twenties, just a little different now, right? So the US economy grew by 42%, right? So industrialization is happening, the automobile is invented, all of these great things are happening, and the economy is just booming. But then, as we all know, what happens in 1929? Stock market crashes, right? So look at this. This little chart here kind of shows you everything is ripping along great. Everyone's having a great time. Things are great, great, great. Oh, things are not great, right? Oh, and we're not done here. That sucked. But now, oh, we're going to make it back up. We're going to make it back up. Oh, no, we're not. And we're back down into the 30s, right? So what happened here is, as a result of this huge crash, the United States government established the Securities and Exchange Commission in 1934, right? Remember the 1933 Act and the 1934 Act? No, I'm not going to ask you what the heck is actually in these things. But basically what happens is the government says, oh, hell no. We are not doing this Great Depression thing again. We're not doing a stock market crash again. We're going to put some rules in place because what we think happened is that in the 1920s, there was no uniform financial statement requirements. And so when you picked up financial statements for one company to compare it to another, you literally couldn't do it because the methodologies that they were using to count for things or account for things was different. And so the government said, no more of this. We're going to have uniform financial statements. Those are going to be required to be audited. You need them to be audited. Okay, so in 1913 and in 1934, 1913, you kind of see tax start to really kickstart and get into things. In 1934, you start to see this audit side of things where, hey, if you want to be listed on these stock exchanges, which have been around for a couple hundred years at this point, you need to have your financial statements audited. So this is really where you start to see public accounting take flight and get born. Does that make sense? Okay. So since 1932, right, that remember when we talked about kind of the bottoming out here in 1932? So since 1932, look at this. This is the bottom here. We kind of come back, right? Like post World War II, we get a nice big boom. Then I think somewhere from the 60s down into the 80s, we slide back down again, right? The Vietnam War is in here. A bunch of other things are in here. Look at this though. From about 1982, and this is through today. Look at this. I mean, you obviously can see some dips here, right? Like I forget where we are here, but one of these is that's 2008, 2009. And this is actually COVID up here. But other than that, from like 1982 all the way through today, look at this huge growth. I mean, this makes this stuff look kind of small, right? So ton of growth happening, all right? Who cares? Why am I pointing out all of these stock market things and the history of all of this? The reason I'm suggesting this is because according to market research, public accounting, tax work, advisory services, audit work, it's a $120 billion industry. Now, I did think it's interesting that most of that, or more than half of it, is cornered to the big four, but $50 billion for the rest of us, that's a lot of burritos you can buy with that kind of money. Sorry, I'm a big Taco Bell fan, so I think of things in terms of cost of burrito, all right? Oh, by the way, in the last 10 years, each one of those big four firms has more than doubled their revenue, right? So the reason I'm telling you this is this industry that we're talking about is still growing and is still getting bigger, and there's tons of opportunity for all of us in there. All right. Now, to put this in a little bit of context, and that now don't let this scare you off from entering public accounting. I assume most of you are not entering public accounting because you think you're going to be gazillionaires at some point. There are far better industries for that, right? So one of the most frequently, remember, public accounting is a professional service industry. We're a service. We don't make anything, right? As much as David can try, he doesn't get to make anything. He just provides a service, right? And so what you're looking at here are other service industries. Law, I just picked three: law, information technology, and medicine. Now look at this. Law is more than double the size of public accounting, right? A lot of lawyers, a lot of money to be made in the legal world. Look at information technology, guys. Oh, 320 billion, that's cute. $2 trillion in this industry. And then medicine, healthcare, right? $4 trillion. Yes, we all could have been doctors if we really wanted to, right? But we decided public accounting was a better calling for us, right? These are just a few service industries that I wanted to highlight because most of these don't really make anything. They're service industries. Although you could make the argument that IT and medicine, there are some physical, tangible products that are made in this space. Does that make sense? Thinking of public accounting or accounting in general as a service, right? Okay, so now that we understand kind of how public accounting fits into things, or accounting fits in, this is my least favorite question in all of recruiting: is how did you pick between audit and tax, right? I wish I had a great answer for you guys, but what I want to do is provide some background in terms of these are the three buckets primarily that you're going to see: assurance, tax, and advisory services. Assurance can also be called audit. So audit is a form of assurance service. So jumping into this, what assurance does is basically says we are going to provide assurance that the financial statements that you're reading are reasonably accurate. right? And the reason companies require an audit is usually one of two things. Either you are a publicly traded company, and according to the Securities and Exchange Commission, you are required by law to have your financial statements audited by an independent third party. Or let's say Leander comes up with a brilliant idea for business because he's a super smart guy because he went to CSUN, and Leander goes to Bank of America, and Bank of America says, Leander, you know what? We believe in your idea too. We think this is going to be great. Here's $100 million for your brilliant idea. Rosie's sitting there going like, no way, Leander, you got $100 million? Yeah, his idea is really good, right? And so Bank of America says, hey, you know what? It's not that we don't trust you. We want to make sure that we're going to get paid back. And $100 million is a lot of money, even for Bank of America. So Leander, in order to qualify for this $100 million, every year you must give us audited financial statements, and that audit has to be provided by an independent third party. And Leander says, oh, do you care who I pick? And Bank of America says, well, we want you to use somebody reputable and amazing, so we think you should use Bakertilly. And Leander goes, yes, of course, Bakertilly, solid firm. Everyone knows who they are, right? So bankers usually will make recommendations based on their relationships with who they think you ought to use as an auditor, or they'll just say, it's up to you. You can pick whoever you want. The point is, most audits are triggered either by one of these two things. Either you're a publicly traded company and you're required to by law, or you have some sort of debt financing from a bank, and the bank wants you to have your privately held company, but the bank wants you to have your financial statements audited. Not wants, but requires you in order to continue having that money. Right? And so assurance basically looks at your financial records and says, yeah, we're going to compare receipts to invoices, to cash received or cash paid and all that stuff. And we are going to, through a bunch of procedures, verify that the information you're putting out there is accurate. Now let's jump to the tax side. David, Thomas, correct me if I'm wrong here, but what you're looking at here, tax makes no such promise that we're going to audit your financial statements, right? So when tax guys are given information, let's say some of that information is incorrect. Our dear tax professionals get to go, oh, whoa, not our fault. Your fault. Under the terms of our engagement, you are not paying us to make sure that your financial statements are accurate. And if there's anything wrong with this information, that's your fault, not ours. What you're paying us for is to prepare tax returns for strategy and planning, and also for a host of other tax items. I listed out some like state and local taxes. So the franchise tax board in California, or local taxes, sales and use tax, property tax. There are special measures and travel taxes that get occupancy taxes that are levied in local taxes. There's all sorts of other taxes than just income tax. And even at the income tax level, you've got, remember the different forms of companies you can have? You could have an individual tax return. You could have ownership that's a partnership, an LLC, a C Corp, an S Corp that I didn't put in here. Remember, Cal State Northridge, nonprofit organization. Right? Governmental nonprofit organization, right? They're part of a larger entity that files a tax return every year, right? Sole proprietors. So there's all sorts of it. And then this is, David, Thomas, this is like, I think this is your guys' favorite question, right? Oh, when it's not tax season, you guys just do nothing? It's like, no, right? Like when one company is thinking about buying another company, there are all sorts of tax implications from how that deal is structured. Leander's company that he's going to start, great idea for a company, right? And he goes, wait a minute, taxes in the state of California might be too high for me. What if I open my factory in Nevada, or I open it in Arizona instead? Then he can come to David, and David can advise him on, hey, when you found this company, here are the tax implications of doing what you're about to do. And here's the information, do with this what you will. Right? So this is what tax professionals do. There's a lot, it's working a lot with the Internal Revenue Code. There's a lot of strategy and planning, and it's a lot more than just filing returns. However, filing returns are a large portion of the work, as the first bullet point points out. David, Thomas, anything to add in there that I'm missing?
No, you hit.
It's just every day there's a tax implication.
Yes.
Every business decision, there's a tax implication. And the more you're aware, the better off you can service clients, and even for yourself, because we all have to pay taxes.
Yeah. So this is on the tax side. This is what David. Anything to add?
Yeah, just the planning aspect of it. For instance, if a client wants to sell a rental property they have, and then we could advise them, oh, you could go into a 1031 exchange and basically not have to recognize the gain on the sale of the rental property and use those proceeds to buy another property, and you won't have to pay tax on that gain because you're taking the proceeds and buying a new property. So things like that, there's a lot of planning involved. I know in December we do a lot of projection work, so our clients are paid in with their tax liabilities, and yeah, filing tax returns are our bread and butter. But what I'm learning as I'm going into my second, third year is just the planning aspect of it and consulting aspect.
Yep. And you'll hear a lot of, like, when you start talking to managers or partners about this kind of stuff, for them, a lot of the fun in this job comes at that strategy and planning bullet point, where that's where you're able to exercise quite a bit of creativity and problem solving to really add value to what your clients are doing. Right. So just real quick, guys, does this help clear up a little bit of, like, hey, the difference between audit and tax and kind of what they do? Because when I got into this industry, when I was in your shoes, I had no idea the difference between audit and tax, and I started learning about it. But this is the market, what the market is asking for accounting services, and the majority of them are between these audit and tax services. All right. Now my favorite bucket number 3. Now you guys are all too young to remember the 90s alternative music bucket, which was this, like, it could be anything, right? And so advisory services, literally any services that are not audit or tax, right? And so it's a huge mix of different services that are related to but are not assurance or tax. And I usually, it's a difficult one when students will say, hey, I think I'm interested in advisory services, because there may be, it's such a big, broad umbrella that there may be some advisory services that you are interested in and some that you are not, right? So for example, municipal advisory services. We work with local municipalities for financial planning and implications of different things. That may sound really boring to you. Whereas outsourced accounting may sound a little bit more, okay, we're going to farm, Rosie, we're going to send you out to be an in-house accountant for Leander's startup company over here. And that's an advisory service. It's not assurance or tax, right? And there's literally hundreds of different services within this little umbrella, right? Any questions about assurance, tax, or advisory services before we move on? Okay. So your career opportunities, here are the different things, like, where are we going from here? What do we do with this, right? So obviously, if you work at a CPA firm, you get to do one of these things. But I wanted to share with you kind of the turnover in public accounting, right? So you guys are all, well, let's see. You guys should be aware of the fact that there's a high turnover rate in public accounting, right? Can anyone, any brave souls out there, raise your hand at all if this is surprising to you, that you did not know that there's a high turnover rate in public accounting? Okay, smart people here, matadors, all smart. I wanted to explain this, and in my opinion, people always ask, like, oh yeah, like, don't you think the turnover rate's unfortunate? And my response is usually no, and that's not just because I'm a campus recruiter and my career depends on people needing a job. Cynical version. I think that turnover in public accounting is a good thing because it means that you're going on to do something else that you want to do. This is, for many of you, this will be your first job out of college, right? Your first career out of college. Most of us are guessing. We think based on what we've studied and of what we know of the industry that we think we're going to like this job. And maybe you get it right and maybe you don't. Right? I was an auditor to start with. That wasn't quite the right profession for me, but I knew that I loved the firm and I knew that I loved my bosses and I liked the industry. I just wasn't the world's best auditor. So I would technically be one of these statistics for turnover, but it's because I found what I really enjoyed doing and got to stay with the firm and do it. Right? So I wanted to lay out a little bit of a timeline. Let's say you start and we've got 100 first-year associates, and we know that the turnover is high. So after a year or two, let's say 50% of them leave and 50% stay to become a senior associate. Of that group of 50 senior associates, we make it to year 5, and 50% of them stay on to become a manager, and 50% of them leave the firm, right? Now, of those 25, maybe a third of them after 10 or 12 years go on to become a partner, right? So look at that. 8 out of your starting 100 are going on to become partner. So my question is always, if you count up the bot, did anyone audit my work here? 50 plus 25 plus 17. The other 92 people in public accounting, where do they go and what do they do? Or I said 8 and 17, right? So there are people who at public accounting firms will stay on as a manager. They don't want to make partner. They don't want the extra sales responsibility or responsibilities. They become a director. Maybe they're a quality control director or manager. Maybe they just stick at being a manager because they don't want to become a partner, right? So the other 75 people, right? What are they going to do? Because they've all left the firm. They all go and do something else, right? You'll hear people refer to this as exit opportunities, or kind of what do you do with, like, what happens when you leave public accounting? What I wanted to do with this graph more than anything is point out, like, the way public accounting firms are structured, only very few people actually make it to being a partner. And that's not because it's, it's difficult to make it there, but it's also because along the way, if something else comes to you in your career that you want to try instead, you have the opportunity of jumping off and going and doing that. Right? And in our vantage point at Bakertilly, we don't see those 75 people that leave the firm. We don't see that as a failure. As long as you get your CPA license and you make it to a senior associate there, what we want to see is you go on and do something else with your career that you enjoy, right? Maybe you become a controller somewhere. What else is it that you do? Where did those 75 people go? Did they just disappear into the bush like Homer here? The big thing with public accounting, in my estimate, is it's a very, very solid and great foundation to build. What you're doing is choosing to become financially literate, and you're choosing to see the world through a financial lens. Now, at some point in your career, you may get interested in marketing or HR or other various aspects of business. Maybe you would like to go become a teacher. There are other things that start to interest you in your career. And guess what? That's totally okay. And we highly encourage you to go after the things that you're interested in. But having a background in accounting, either tax or audit, having your CPA license just makes it a foundation for your knowledge set. So no matter what company you work for, whether you're self-employed and you're an entrepreneur, or you go to work for another company, you at least understand the financial transactions that go behind making that company tick. Does that make sense? So to recap, we covered a brief history of public accounting. We talked about what CPAs do within the firm, and then what you can go on and do with that, regardless of where you go with your career. It's a foundation, and it's something that it's a lens through which you choose to see the world. So at this point, guys, any questions at all? By the way, one last QR code, because in the era of Zoom and COVID, we love our QR codes. This is a digital brochure that it's probably already outdated because the firm keeps acquiring other firms. But here's a digital copy of the brochure. Any questions at all? I'll leave this up for a minute, and then I'm going to take it down so we can see everyone. But is there anything that you guys are curious about? I wanted to turn this over now for a Q&A session. So if anyone has any questions for David or Thomas or myself, go ahead and take yourself off mute and ask away. Leander, go for it.
Yeah, so you talked about how accounting is just a growing industry, but I was wondering, is there any significant market trend that you're noticing in the industry right now? Like, are we changing the way in which we do the job fundamentally?
Yeah, great question, Leander. And Thomas, David, I'm going to come to you guys after I give like a quick answer on this one. I'll buy you guys a little bit of time to think about this one and your own experience. But Leander, what I see from my vantage point, I've been in the industry for almost 10 years at this point. the value add for your clients is becoming more and more important. It always was important, but if you start to limit yourself to, I'm only a tax professional, I'm only an audit professional, you're really doing yourself and really your client a disservice by not considering yourself a business person who has the knowledge and ability to help your clients find solutions to their problems. Now, I'm going to punch myself in the stomach for saying this because I absolutely hate the cliche of, oh, what do you do? Oh, we provide solutions for our clients. Like, what does that mean, right? But in business, you have a bunch of clients that are doing stuff and they need help with stuff, whether that's tax or audit services or advisory services or transaction services. And our aim is through financial expertise and knowledge to be able to help them. So even if stuff starts to become automated or there are different functions that are being outsourced or what have you, we have to find a way of providing value for our clients. So a lot of that is in being able to interpret data and to provide meaningful information and actionable items to our clients. So Leander, that's the way I see the industry changing in terms of, okay, yeah, some of the busy work that we've been doing is getting freed up by automation. But what that means is we've got to find other ways of providing values to our value to our clients to help them get better at their business, right? David, Thomas, anything you guys can kind of comment on and what you've seen in terms of the industry evolving and changing?
You touched on the biggest thing, which is technology, and that's the forefront right now, and that's what's really changing the processes that we currently are going through. Whether it's automation as far as getting in documents, scanning it into the tax return program, and spitting out the numbers, which is taking away from the manual data inputs that we would be doing. Or even with clients, now we have a platform where we can share information between clients digitally rather than getting documents in by mail. You know, we're moving away from paper. And even when it comes to just being professionals, pre-COVID, we would all be in the office working, watching everyone's hours, be in at 9, leave at 6, 7 during tax season, maybe later. But now it's a remote environment, which is really changing the dynamics of how do you take ownership? How are you learning? How are you still building relationships with others? So we're still learning all the best practices, but this industry is changing, and it's changing for all of you that's coming into it. I think it's really exciting. You know, it's different, it's challenging. Change can be hard, but change can be good. And we're definitely moving into changing our industry.
I would like to expand on Thomas's point about how we have a remote environment. I know that whenever basically what happened was whenever I got sent home, like before COVID, I thought social distancing was like not being on Facebook or Instagram. But then now social distancing is 6 feet apart, staying at home. And we're definitely transitioning into this working from home, working anywhere. And it's an interesting time. And another thing in terms of trends that I've been seeing is a lot of cryptocurrency. It's interesting, like looking at the IRC and how they're interpreting it, how it's still new, and how we're preparing taxes for clients that made their money overnight due to crypto. And that's a trend I'm seeing, is the taxation of crypto and how it affects our clients.
Yeah,
Thanks,
great question. And certainly there's a lot of changes that are happening. And it's the nice thing about a career in accounting is as new financial instruments come out, whether that's cryptocurrency or derivatives several years ago or anything like this, it's usually something thought up by finance people. And then the mess that's created by it is sorted out by CPAs, right? And so no matter what gets cooked up or thought of for the next innovative financial instrument, it's going to be CPAs and accountants who are the ones that are really going to unwind it and figure out exactly what it means and how it impacts everyone. All right, guys, anyone else have any questions? Isaac, go for it.
Yeah, I have a question for David and Thomas. So specifically a tax question, because I'm interested in state and local tax. You said that apart from preparing tax returns, you also do consulting services, I believe. And so what exactly does that look like? Do the clients give you their information and then from there you give like a suggestion as to what they should do, or how does that exactly look like?
Yeah, it's a great question, because so many times clients ask us questions and then it comes down to, you know, what's our job? What's our role? Our role isn't to tell them what to do and demand that they do it. Our job is to give them options and alternatives so that they can make the best decision for themselves, and especially specifically on the tax side and the tax implications. And when it comes to SALT, state and local tax, you're dealing with different jurisdictions. And so you might have, you might be a California resident that has business in, say, Florida or, or Tennessee or another state, and there might be apportionment. And your client might not know anything about those states other than they're doing business in there and they're expanding. So they'll come to us to find out what taxes do they need to pay and how can we minimize those taxes. And it's our job to be able to consult and provide planning opportunities for them to be able to reduce their tax liability.
Sorry, I was trying to unmute for the longest time and it wasn't pressing the button. But yeah, Isaac, great question. The way I look at it is consulting is more of a byproduct of what we do when we prepare the tax work. We do the compliance aspect, and then all of a sudden a client asks a question, like for instance, the example I brought up about the rental property being sold and going into 1031 exchange. What are the tax implications of it? And I don't really do much of the consulting because I'm still at the associate level, but that's more like Thomas and the partners responsibilities. But if I do have a consulting idea, and I'm not comfortable expressing it to the client, I always have my managers and partners to practice that skill set and see if I'm correct. And then in terms of SALT, where I saw that area be affected was with the PPP loan forgiveness program. Some states were not conforming to federal, in which basically whenever you have the PPP loan forgiven, it's it's counted as tax exempt income. California was taking a really long time in conforming, and we have a pretty good SALT department where they made like a matrix in which they classified it by state and the flow through entity that was being taxed, and whether or not we were able to treat PPP loan forgiveness as income, as non-taxable income.
Thank you very much for answering the question.
Our pleasure.
Okay.
Thank you. Good question.
Any other questions at all? Leander, go for it.
During your presentation, you touched on some famous dips that the U.S. economy has been through. I was just wondering, with recent trends of inflation and the stock market not doing so well, how has the accounting profession fared through things like economic dips? Is business booming, or do we get a slight downturn as well? How much are we affected by this?
What do you think? I'll let you try to answer that question first. What's your hunch?
My hunch is I think it badly affects us because after all, we're a finance. We provide services in finance, and when finances aren't doing so well, I would think that we wouldn't be.
Okay, so let's break it down though. So do you think the audit space shrinks? Why would assurance services go away during a recession?
Businesses might fail, they might turn over, less businesses.
Sure, we have some businesses that go out of business and that sort of thing, but even the ones that aren't doing well, maybe their audit fees are a little bit less, but they still are required to have those audits, right? So the lion's share of these things are still going to be there. Now let's go over to the tax side of things. Same concept, right? Okay, if we're going to charge per entity, maybe there aren't as many entities that are around, but rain or shine, good or bad, as long as that business is there, you're still filing some form of a tax return, right? And if anything, your tax planning becomes more valuable and more important because you're looking for ways of saving money. And if we're going to do things like shut down this factory, what way do we do it in which it doesn't cost us an arm and a leg to do it, right? Now, secret door number 3 is actually where I think you may find some interest. So in the advisory services, yeah, maybe we're not doing as much M&A activity, right? Maybe all of those special projects that we were working on to optimize this or add in a new system of this, maybe those are getting shuttered a little bit, right? Now, obviously, when the economy does poorly, everyone does poorly, right? We are a service industry that ebbs and flows with our clients, right? But just because something does well or doesn't do well, the services are still required. The audits are still required by law or by your bank. The tax returns are still required by the IRS, right? And so the industry, when recession happens, the industry is still stable because we're still serving clients, and as long as companies still exist, and even when companies are closing, you're not seeing a huge number of them close. You're seeing some of them close. And what happens is, especially in the labor market, the investment banking jobs and the advisory service jobs that used to be there because things are expanding start to go away. And what you start to see happen more often is you start to see many more audit and tax positions that once upon a time didn't look as great during a boom. All of a sudden, these are the stable jobs because the CPA firms have weathered these storms literally for over 100 years. Right. So yeah, go ahead, Thomas.
I'll also add Bakertilly's revenue has increased in each of the past 2 years while we've had the COVID pandemic.
Right. And that's a huge part of it, Leander. That's even if you roll it back, that's what I was saying, over the last 10 years, all like the big 4 plus other firms have literally doubled their revenue. So yeah, as bad as COVID has been as far as inflation or the stock market or any of that kind of stuff, and obviously inflation would actually prove your point to a certain extent, what you're seeing is all of these companies at record profits. The industry is doing just fine.
But the industry is doing just fine because of the people that are doing the work.
Because we don't actually make physical things, right?
Yeah. So that's why we're very much needed. As a team as a whole, we're only as good as all of us working together are.
And I would like to add, from an employee standpoint, when COVID first happened, first thing I thought was, oh man, I'm not going to have a job anymore. But you're still going to have a job because the services are still going to be needed. And I would say our jobs are recession proof because taxes are always going to be needed to be filed. Audit services are needed. And yeah, we're in a good spot.
Anything, Leander, the industry is generally looked at as a recession-proof industry. Now, I'm not going to go that far. It's like anytime someone says, oh, this is recession-proof, honestly, my first thought is the Titanic sinking, which was an unsinkable ship, if you'll recall. And so, yeah, it hurts. It can hurt. Like, you can see your clients go out of business. You can lose clients that were big clients. It really hurts. So, yeah, I'm not going to sit around and say we're like chortling with glee as the economy suffers. But at the same time, if you take it, and that's why I showed you those charts. if you take the zoom back and take a look at it, the industry has weathered many storms and performed quite well during those storms because of the nature of our work.
Thank you. That's very reassuring.
My pleasure. Guys, any other questions at all? Isaac.
Yeah, I got another question regarding the turnover rate. So
Yeah.
let's say, because I'm staying in local tax, that's what I'm interested in, but how long should I stay with that industry if I'm not too sure if I want to be like, maybe give it 1 year or two? How long should I stay in it?
This will vary opinion and person to person to person, and these are there will be different opinions in this group. My general rule of thumb for anyone who decides to work for a public accounting firm, make it to senior associate and get your CPA license. And the reason now look, if you're like literally miserably unhappy to the point of like physical and mental anguish, like leave after 6 months. Like that's not like, I'm not advocating that you like duke it out, like stick it out and take on a bunch of pain and misery just for the sake of doing that. The reason I suggest making it to a senior associate role and getting your CPA license is the things you'll be able to go on and do after like increase dramatically if you make it to a senior associate and have your CPA license, even if that license is inactive, by the way, right? I get to put that next to my name for the rest of my life, as long as I pay the state board $200 or $250 every 2 years, right? But that's my recommendation, is that you make it to a senior associate, which is about 2 years, and get your CPA license. Once you've done, and by the way, if you're only going to pick one of those things to do, get your CPA license. Like it's the biggest deal, and it'll change everything in terms of opening doors after you decide to leave public accounting.
Got it. Thank you very much.
Mm-hmm.
And piggybacking off of Isaac, just a fun one. What has been the most interesting exit opportunity you've seen that someone has taken?
Because you use the word interesting, because I mean, it's not uncommon to see people go on to become controllers or CFOs or other finance related jobs. But I'm trying to think of like just a wacky left turn of, oh, there are jobs where people will leave and go work for the IRS or go work for the Securities and Exchange Commission, people that have left to enter politics or things like that, right? So there's some of those. Off the top of my head, I can't think of anything personally. Thomas, David, if you guys can think of anyone that you know of.
Yeah, I mean, one of the things that Bakertilly does really well is try to find talent in unusual places. So you might start off as an accountant. Maybe you work here for a year or 2 years, and you find out you're really passionate about technology. You can transfer departments to work in our IT department, in our support services. And I've seen that so many times where people move around. Maybe they want to go to people solutions, which is like HR. There's different jobs, different paths that you can take, and working for such a large firm like Bakertilly allows you to have those opportunities to go in different paths. So everyone's journey is different, and you should continue your journey for as long as you're passionate and happy about what you're doing.
That makes sense. Thank you so much. Well, is there any more questions? Last call.
I'm sorry, guys. I have the dog crying in the background, but it's been a pleasure. I'm going to go take her out, and it was nice being part of this event. Thank you.
Thanks,
Thank
David.
you, David.
All right, guys. Well, yeah, thank you so much for having us. Appreciate it. If you have any questions, feel free to reach out to any of us when you like. Reminder that deadline for applications on Handshake and our website are 2/25. So hope to see you out there. Holler if you have any questions, but have a great rest of your day, and we'll talk to you guys soon.
What we would like to take our marketing screenshot first.
You got it.
So if everyone can please turn on their cameras for the picture, that would be great. All right, let me do a countdown. So 3, 2, 1. Great. I'll do another one just in case. So 3, 2, 1. Got it. Perfect. Thank you everyone for attending today's meeting. And again, thank you to the professionals for attending, Garrett and Thomas. And thank you again.
Guys, have a good one.
Take care,
Have a
everyone.
good one as well. Take care.